Good morning, traders. Welcome to the Flow Show. And I want to start by saying that you can't say you haven't been warned. I've been banging on for several weeks now that if Japan is going to start intervening again, they might have to change tack because what they did last time wouldn't work this time. And if, as suspected, what's happened this morning, they might have just done that possible intervention again today, as you can see from these moves here, all the way down from the 158s down to the 156s. We'll have to wait for the accounts again tomorrow, no doubt, but we shall see. And it would be a bit of a departure if they have done to what they do previously. Morning, Kay. How you holding up, mate?
Good morning, Ryan. Good morning, everybody. This is I'm fine, mate. I'm fine. Most of the positions are doing good, and actually better than some I would expect. I just posted that picture in our room, and also spoke about it yesterday. They seem to be going at it completely differently now. It's kind of a guerrilla style intervention, right? So we've had 2 days of lesser amounts than the last interventions, which may have fooled a few people, but I think this is completely different style, and come smaller but come much more often and scare away the speculators, and that to buy time until the Bank of Japan, I think, and this is exactly what we are seeing right now. They know the levels, they know the flows, they know where it would hurt. So I suspect that this is now the style that they will employ, which is better, I think, than the one before. But the one before, we also have to put it in context, right? The one before, the dollar was not really giving up the ghost yet. Now the dollar elsewhere is also a bit offered, and so they have perhaps a little bit of an easier time to turn the tide around, but definitely they are doing it differently. That's what I also said yesterday in the room. What would be worse? The worst that they could do is just go and sit on the offer, because that is not something that is working. I've seen this to the other side when they were for 2 decades trying to buy dollar yen on or sit on the bids in dollar yen, and that didn't work at all. So I think what they are doing now is pretty cool in keeping the speculators on their toes and trying to scare them away for the next 2 or so weeks.
Yeah, and this is more and more now smelling a bit like 2022 vibes. When they were intervening around here and they happened to catch the turn in the data from the top of inflation and the like, and so we could be on for one of these type moves, a big move south, but it's going to need a lot of moving parts to add to that as well, i.e. further softening the US data. But we said even before the Bank of Japan ended NERP and all their bond buying and ETF buying and everything like that, that if the yen didn't respond to that, they were going to have a big uphill battle to fight. Because if your central bank can't turn around the fortunes, if your economy can't turn around the fortunes of your yen, you're going to have a big bum fight. And this is where we're at the moment. I think they have got a big fight on their hands, but they are pushing a bit on an open door, as we said, with the softening US side of things. But
you're right, Ryan.
Guerrilla warfare.
Yeah, and you're absolutely right that the fight is still on there. We imagine Bank of Japan underwhelms at the end of the month that they don't got really the JGB buying by a fair chunk, even if they would raise the rates by, let's say, 15 bps. They could come with a shocker and do 25, but that remains to be seen. But as you say, if they are underwhelming at the end of the month, then the fight is not over. Far from over, by the way.
I think a 25 BP is too expensive for them. Just to go, that would be quite a shock move, and given how much of the bond market they own, and
especially that the government is only thinking about putting those variable bonds in place in 2026. I mean, it's so too late. They should really do it right now, inflation-linked bonds, but they're not yet doing it. So it's still over to whatever the MOF can come up with, and then the Bank of Japan at the end of the month. And yeah, that still remains to be seen. In the meantime, the way they do it, they can easily put it down below somewhere, perhaps 155, even below, because they've got help from the other dollars. And that would already be something. And then we will see at the end of the month. Yeah. And as you say, the US data. They really need the US data now to start looking like other data, like the Eurozone, also to curb the whole thing.
Yeah, exactly. So depending on where the end's sitting into the BOJ, we can probably expect a few snipers in the bushes around that meeting. Most definitely, that'll be a big intervention risk meeting, that one. But anyway, let's move on. We'll look at the prices in more detail shortly. Over in New Zealand, we've had this much awaited Kiwi inflation data, and it has gone the way of the RBNZ in terms of moving towards cuts. So the quarter-on-quarter inflation coming in at 0.4%, lower than expected. Year on year coming in at 3.3%, lower than expected. They've also got another funky measure that they use. It's called the sectoral factor model or some bollocks that they like to dream up, these central banks. That came in at 3.6% versus 4.2%. So another lower mark there. So everyone's jumping all over rate cut expectations for the RBNZ, and ANZ have done a bit of an HSBC. So pretty much earlier this year, February, March time, they were predicting that the RBNZ would cut in Q4, penciling November. When their research team come out with that, their actual CEO actually said that he sees it more as into 2025. So the research team last month decided they're going to follow their CEO, and they moved their forecast last month, not 20 days ago. They moved their forecast for a rate cut in November to February 2025. And three guesses which way they've gone this morning after this data. You guessed it, all the way back to November. So another bank whistling in the wind there. But anyway, that's increased the chances of an RBNZ rate cut. Still far out, though. Excuse me. Still far out, though, in November. Okay, is there any room for that to come whittling back a bit sooner?
Okay, knowing or everything's possible. He can cut. When is the next meeting? Kiwi. 14th of July. Oops.
14th August.
Yeah, what was that? Did my microphone just do something funny? No, well, I don't think that's on the cards, but people are also hiding behind that non-tradable CPI thing, which is still stuck at above 5%, 5.4. So there's a lot of eyes on that, which seems to hold people back from expecting too much, and which also saw what was the main reason for the Aussie not to for the Kiwi, sorry, not to dump any further on the headline CPI. Yeah, what do I make of it? You know what? Nobody wants to hike anymore. We've been saying it so often, and we're looking at cuts. I think November is just a plausible one. Even if that non-tradable goes down much slower, that could get actually a knock on the head anytime. Because don't forget that the antipodians, that's why they're called this way, are going more into winter time, and yeah, it could just be that we get a bit of an acceleration lower in between now and August, September, and I wouldn't completely be against it or rule it out, that we have November, but it's November, as you say. I mean, it's not happening tomorrow, right?
Yeah, exactly. So a lot of water to go under the bridge, even though we don't get inflation until quarterly. So it's going to be September before we get the next inflation data from those lots. But yeah, we shall see. We shall see. No one knows when they're going to cut, least of all the banks. It's just pointed out. Excuse me, got a little bit of a tickle. Right, more inflation data, a whole stack of it there from the UK. And what does it mean for the Bank of England? So just to go through the numbers. First, headline CPI stayed unchanged at 2%. That's bang on the BOE's target for the second month running. Core inflation was expected to come down a pip. It stayed unchanged as well. So purely on that basis, there's been no change in inflation since the June BOE meeting, which one could say possibly shows that they don't need to change rates if nothing's changed. Now looking at some of the other details. So services, there's a metric services number in there that was unchanged as well at 5.7%. That's one of the figures that the bank are looking at. So that still remains sticky. Again, reduces the chance of a rate cut in August. CPIH, which is on there, also staying sticky, 2.8%. So again, these numbers sticky. RPI 2.9% did come down, but only a pip, still a hefty number there. PPI as well. Now, a couple of things. We've seen negative year-on-year numbers on input prices for quite some time now, pretty much going back into last year as well. But if you take it from the beginning of the year, we've steadily seen these negative numbers lessening. So turning towards the positive. You can see by the chart there, we had a big reaction up, had a little bit under, but now we're just creeping up again. So potential for some PPI pressure to come in over the months ahead. The Bank of England do expect to see inflation being a bit bumpy. Also on the output prices, still positive on the year though, and negative on the month. So these is producers what they're charging after they've produced. So again, there's still a bit of stickiness there, even with that falling month on month. So overall, there's enough here to say that the BOE will stay on hold. There's still plenty of data to go under the bridge. We've got the jobs data tomorrow. So there's two things at play here. Yes, inflation hasn't changed, but inflation is at target. Do the Bank of England risk seeing inflation falling below target before they move on rates? Bailey's previously said that they don't need to wait for inflation to get to target before cutting rates. Well, here we are. He's also said that one small rate cut won't effectively change the restrictiveness. Is there enough here to get some of those fence sitters jumping into cuts? As I say, I think the wages data and the jobs data tomorrow might be enough to swing some of them. I think at the very least on all this data, and without knowing what tomorrow is going to happen, most or at least we get in August is an indication that September's on the cards. Maybe one or two of these fence sitters moving to the cut side of things, keeping it unchanged, but indicating we're creeping closer. But August, I think it's still in the frame. Markets reduced expectations to 25% chance of a rate cut at the August meeting. I think it might be a little bit higher than that, personally. We know they're desperate to cut. Will they, is the question. Kay, what are your thoughts on all that UK data?
Yeah, that's a very nice sum up of what's going on and what the ideas may be of those who were just on the limit border of going into cut. Perhaps not enough to go for the cut, but not well sticky, yes, but not high enough to keep them on the other side, I think. So it's going to be a close call, August. That's what I think. In the meantime, we've seen overall that the sterling is still doing all right. Bit of stability in the UK system. Data not too bad. So if you would actually take away the stickiness also of the inflation, it's still doing all right. So I don't know, but I'm long sterling and I like it. So will the increased probability of a cut weigh heavily in the sterling? That is the question. Because
No.
if let's say August they don't cut, and then they will very likely cut the meeting afterwards. Is it going to change much? That is, I think, the question that we have to ask ourselves now. And unless they really hint at something, I don't know if we get any more speakers out soon, but I would say it's not going to change the needle a bit. But I agree with you that the probability now priced in seems a bit low for me too. But is it going above 50? I don't think so.
Yeah, no, I don't think so either. Yeah, as always, we're not trading if, we're trading when, as far as rate cuts are concerned. So yeah, no one should be expecting if the Bank of England cut rates in August, no one should be expecting the pound to collapse. Yeah, there'll be a bit of a shock if the market's underpricing it, but after that, yeah, so what? They've done it. We knew it was coming. Move on to other things. So yeah, we're still in that situation with a lot of currencies. You know, there's no real moves on rate expectations at the moment. Bit of waffling around the calendar, and that's about it. Right, moving on. Back to the US and that data yesterday, and once again confounding expectations that the US is about to descend into a fiery abyss with the data. Pretty strong retail sales. They came in flat in the headline number, were expected to fall. Take out some of the the other measures, take out gas, take out autos, that sort of thing. It rose 0.8. This number here, the control group, which is like core sales, pretty healthy looking 0.9% compared to expectations. So yes, people will jump all over it's not inflation adjusted, and real sales adjusted mean that no one's bought anything since 1962 or whatever. Numbers are the numbers. They're not negative numbers. They're pretty positive numbers. So as Blake said yesterday, you do well not to bet against the US consumer. We also got some import and export price data, which was a little bit all over the place. Export prices down, but import prices up. There was some skews in there from gasoline and fuels and oils and other things in there. So a bit of a messy picture from that. But overall, US data, particularly retail sales, looking okay-ish. We also got the NHAB housing market index a little later. This one had been looking soft, and it went soft again by a point. So again, further yellow flags being waved in the housing market. We get some further housing data. I think today we get starts and permits. Let's have a quick butchers. Yeah, starts and permits today. So we'll get another look to see how that's doing there. Other data we had was Canada CPI, which all came downish, depending on which one you want to look at. There are 30 different measures. Common 2.3 versus 2.4. Headline 2.7 as expected, but confirmed the drop from 2.9. This one down, that one up or unchanged, up over expectations. Not really moving. Well, it has moved the needle a little bit. We're now pricing 90% chance of a cut next week versus 80% previously. I think that's more the case that nothing went up. So it looks like we're nailed on for a cut from the BOC next week. That obviously means the bigger price risk is if they don't. But for the loonie, that's where we sit with that amid what's going on elsewhere in the dollar. I've had one Fed head out. Fed's Kugler says it will be appropriate to begin easing monetary policy later this year if economic conditions continue to evolve favourably. If the market cools too much, it will be appropriate to cut rates sooner rather than later. the employment mandate has become much more relevant. If incoming data doesn't provide confidence that inflation is moving towards a 2% target, it may be appropriate to hold rates steady a little longer. On the rate expectation front, the market is, or one aspect of the market is now pricing a September cut at 100%. So that's where the target is. The bullseye is on September for that. And as mentioned, the B.O.C. now 90% for next week. Europe, we know that they want to slam tariffs on Chinese EVs. Well, there was a vote. 12 members backed those tariffs, 4 voted against it, 11 of them abstained. This was a non-binding vote, so just the way politics works in the EU Parliament. They get a consensus opinion, if you like, but only 12 members backed that. 15 either voted against or abstained. Donald Trump has been out and about in the presses, throwing out some comments hither and thither. He's warned Powell not to cut rates before the election. He also said that Taiwan would need to pay for any help in its defense against China. And these comments have caused a bit of a wobble in some sectors, particularly chip stocks. The market drew a bit of a conclusion when these headlines first dropped, that he was saying that the US aren't going to back Taiwan if something kicks off with China. But that's not what he said. He's talking about they'll need to pay for any such defence, which, again, one could draw the conclusion if they don't pay, they won't get the US help. Although the US does have some laws in place, I think, where they've got to step in and help Taiwan on a military basis. I don't know the ins and outs of that. But his comments are hitting tech stocks, hitting chip stocks this morning, which is causing a bit of a fallout in the NASDAQ particularly. Again, that might be a bit led into what's going on in the dollar and in what was going on in dollar yen, because as Kay mentioned, we're seeing the dollar weakening across the board as well. But Trump also had some comments on the currency, and I'll read you the exact quote. He says, "So we have a big currency problem because of the depth of the currency now in terms of strong dollar and weak yen, and weak yuan is massive." He said, "I used to fight them. They wanted it weak all the time. They would fight it. And I said, if you weaken it anymore, I'm going to have to put tariffs on you." So those comments on the currencies themselves, again, has the market thinking that if he gets into power, he's going to be running along those lines again, that if currencies weaken too much, he's going to hit them with tariffs. Once again, it might be a reason why we're seeing those particular currencies strengthening, because dollar China is also dipping alongside that. So, okay, this might be one reason why this isn't intervention, because we're seeing other pairs move in line with these comments.
No, this isn't intervention in the dollar yuan. This is
I meant in the yen. Just, it might not be intervention in the yen because of these comments is affecting more than just the yen.
Yeah, it may too. We will see in tomorrow's data. Yeah, those warnings, and we have seen the market trade them. Those warnings, and also we know that the potential Trump administration is looking towards a weaker dollar as well. So it goes well in that whole framework. Yeah, we need to be a bit careful with all the dollars, especially when it comes in, and that goes against what people were saying, like, yeah, well, the dollar should rise when he gets elected. I think it's the wrong reaction to have. Could have a bit of a knee-jerk reaction, but then I think we take the other way around. Yeah, it's back, and also his running mate that it shows, JD Vance. I find it easier to say DJ Vance. He's a geopolitical hawk as well, so he's not going to put anything in the way of or against all of this. So yeah, we may be in for a bit of a reaction as well, and yeah, they are going to pick up the tariffs again. The fight against here and there, probably have them tax Scottish whiskey again, and what else not? Lukewarm English beer. So yeah, we're back on the train. It's actually very predictable, right? When you hear him talk, he's just talking like he was in 16, 17.
Yeah, very much so. And I think you're right. What you said yesterday, regards to the dollar, and we've said it all before. Not all dollars are the same.
Yeah.
Yeah, I think because of the shooting incident and the market thinking that Trump's going to be a surefire winner, it's more trading his headlines now than it was 2 weeks ago, 3 weeks ago, whatever. And you're right. If you look at the dollar, yeah, it might strengthen against the euro on a Trump win because he'll be going for pro growth and everything, but it might weaken against the yuan and yen because he wants to hit those currencies if they're weakening again. So I don't think it's all $1 trade for Trump.
Yeah.
And same with dollar mex.
And
there's all moving
yeah,
parts of this.
yeah, absolutely. And also don't forget that let's not forget that China is on the other side of that trade, relatively speaking, right? Because they feel some heat with those tariffs. So I don't think that they will let actually dollar China go down too much right now. And I don't know, but I would really not be surprised that despite the dollar being lower elsewhere, that China comes in and keeps those fixings now a bit on the higher side. So
Yeah.
I wouldn't even be surprised if they move into the 714s, even with the rest of the dollars coming down.
Yeah, exactly. And we even had our favourite propeller head, Brad Setzer, saying that that's one thing China could do if they get hit by tariffs. Fine, just weaken the currency and
Yeah.
reduce the act from them. So yeah, that's exactly what
I
happened.
think we'll know more about China once they come out of the plane, and perhaps we will have some kind of direction, guidelines, and things. So I think tomorrow, the day after tomorrow, could be an interesting one for all things Chinese. I'm going to keep a particular interest in what they may say coming out of those meetings, right? And just Ali on those tariffs, we have just been talking about it. It's not a clear-cut thing. I mean, how tariffs impact the currency. If the it can have a dual effect. If a country cannot export as much as they would do in normal times because they got tariffs stuck on them, it is bad for the economy. So the currency should weaken. Okay, but it's not necessarily the case because you won't know if tariffs will work or not. Slam a 10% tariff on something, it may not make too much of a difference. But in this case, he's fighting on two fronts. He slaps tariffs, let's say for instance on China, but at the same time he tells them not to weaken the currency, and I mean they can instruct I don't know who to even start selling dollar China in a way to massage it lower. But usually tariffs and a weaker economy points at a bit of a weaker currency, if you want. It's never a good thing economically when you get tariffs slammed on upon your product exports, right? And now talking about it, it could actually have a double whammy on the Chinese yuan, and going even weaker if they want to spur their exports through the currency. But let's see, because it's not only that going on, there's a lot of geopolitics as well as play. So it's not as clear cut, but in simple terms, that could be the effect of tariffs on a currency. Yeah.
Yeah, in very simple terms, just in case anyone doesn't understand it, and it's not linear, so it's not one number equals another. If Trump puts 10% tariffs on the goods, it makes it 10%, effectively makes it 10% more expensive to buy those goods. if China's not going to sell that because they're too more expensive, they weaken their currency and make it 10% cheaper. So it's an offsetting factor, weakening your currency against things like tariffs. So one side goes up 10%, they make the currency go down 10%, and net it's zero. So that's why tariffs can have no effect if players want to mess around with their currency to combat it. But as we said, we shall see. I'm getting a bit. I might have a little tap down here in dollar China, which seem to be holding this low at the moment. I'm thankful now. I started doing a bit of slicing and dicing up above 728 yesterday.
Yeah.
On my longs, I'm a bit in the middle here, 727, 27 and a half. But as I've cut a bit up there, I might add a bit down here just to improve the average a bit and play it against this big zone that we've got down. 725's going to be, or 724 and a half is going to be a big old level down here. You adding or looking to add right now? Or are you waiting to see what these headlines draw?
Well, this morning, people know in the trades room, this morning I reduced my dollar China to a strict minimum. I also sold yesterday around 728.90 and very happy about that. This is where I bought it really, what was it? No, I bought it, I bought it in 727.60 and I sold it around 728.90. Then this morning I sold more around 727.80 and I'm actually right down to a very small one, but I'm actually thinking of buying some back. We are on support, okay, just 726, 725.90, but since I don't have much of it left at all, I'm actually thinking that the market reaction is also a lot has to do with the dollar yen being lower as well, and dollar China following suit, right? But I'm not sure that dollar China has much deeper to go unless the dollar crashes away. But is it really going to from here? I'm not so sure. So yeah, I'm thinking about reloading actually a few. Well, right as we speak. Why not?
No, I've gone in. You've talked me into it. I might as well take a little bit as well. Let me see. You probably get a better feel than I will.
725 and a half I got. No, I'm joking.
You bloody vulture. What am I getting? Oh, look, 726 and a half on the nose. There we go.
Yeah. It's around there, mate.
Yeah, so there you go. Bit of live trading for you. Durej, I just mentioned earlier about Trump telling the Fed not to cut rates. Do they listen to him? Probably not. I don't know how many people listen to him, particularly when he was president, let alone when he's not president. No, the Fed will do what the Fed will do. More as a question of what will happen with Powell, whether he stays on after 2026. Powell has also said that he wouldn't look to replace Powell before his term ends. So it looks like, we're stuck with Powell for another 18 months or so, and we'll see who he puts in next. Well, that'll be fun if he wants to put in a new central banker. I wonder who he'll pick.
Have you seen that article in the Nikkei? I mean, he's thinking about Jamie Dimon to come to become a US to become the treasurer in replacement of Yellen. Because I mean, if he wants to keep Powell in, I think Yellen will be a different case. I don't think he wants to keep her. So yeah, that would be a fun thing. Jamie Dimon as treasurer, and big move away from Goldman Sachs by doing so, right? Usually it's always a Goldman Sachs guy that gets the treasurer job, or an ex-Goldman Sachs guy, so or lady. Now that's going to be fun if it's Jamie Dimon.
I wonder if he's going to get the old plunge protection band back together, old Munchkin back in, and all the old crew. I don't know. Has Biden got a plunge protection team? I don't know if he's got the same. That always used to be fun when stocks dipped. Call up the PPT.
Well, so far we didn't need one, right?
Yeah, that's true. That's true.
So far we didn't need one, and I'm not sure he more or even his crew care too much about the Nasdaq. They would rather probably care about something like the Dow or so being more of the traditional crew, shall I say?
Yeah, probably.
Not to call them OAP.
Oh yeah, you did that. Right. Anyway, let's crack on with some pricing. This is any points of order you've got, Kay?
One, Ryan, one, and it's not something that is really right now, present now, but we've got Starmer's King's Speech in the UK, and I'm not going to say I'm not interested in it. Of course, we always listen to stuff in case it makes the market moves. But where I'm more interested in what he's been saying, and now it does look like the EU and the UK seem to be planning a meeting to improve their post-Brexit relationship, and I'm kind of wondering, and I've been thinking about that for a while, if that is not part of the reason why also the market is looking at the sterling relatively positively right now. Because if you talk about improved relationships, and we are not going to go, not even thinking about going back to a pre-Brexit situation, not at all. I'm not saying that, although Starmer would love it, I guess. But if they could come to an arrangement to like alleviate or lighten up all that enormous paperwork and checks and stuff, because the checks, if I'm correct, have been delayed, border checks, because I'm actually going to Brussels next month, and I think they have stopped that scanning thing as well at the border. So I'm wondering if that is not part of why sterling is doing relatively okay. Just a number of percentage points in the fact that it is doing all right.
Yeah, quite possibly. There won't be. Well, Starmer said he's not going to reverse the result or offer another vote, so he's ruled that out. But yeah, I wouldn't be surprised. It'll become a big political thing, I think. And if the EU gives concessions to the Labour Party where they didn't with the Conservative parties, it's all going to kick off politically. But yeah, as you said, there's lots of factors at the moment pointing towards the pound doing well or holding up rather than falling out of bed. And they all add up. They all add up. Right, let's crack on. I'm going to start with cable. I've blown a bit of a trade in this one. When we were coming up just below 130, just as we were seeing dollar yen weakening, I thought, well, this might be going. I did have a buy stop at 130.15. We broke it, got to 13, I think it was, and then faffed around, and I pulled it. I should have left it, but I pulled it. And this one's made the break at 130, knocked out the barrier, and it looks like it's going to crack on. So we're probably looking at up towards these highs now, up in the 131s. That's going to be the next big area up there. Got another level, 131.70s. See where far back that goes to. So that goes all the way back to this area here. Again, one of those long-term multi-year levels where we've had a bit of action up around there, high 131s. So that's going to be the next big level to look at. If we get there pretty quickly, that might be a move too far, one would say. But if it's coming on the back of the dollar moving, and you can gauge that as always by what's happening in euro sterling. So as we know, if the dollar wants to move, it'll move, and that's the reason why we're seeing these moves in cable and euro dollar. It's not because their economies are going gangbusters. So as always, you can measure what's going on in cable as to whether it's a pound move more than just a dollar move, and right now it's looking a bit more on the pound side, not hugely. We're back under 84. We held this low to the pip this morning, so that's your marker. And I did mention in the chat room this morning, if this is going to head down, it needs to probably take out 80. If it takes out 80, then we're probably off and running. Again, I was tempted to add. I've just got no conviction right now. I'm still short this. I'm happy with it, but I did think about adding into 84s. I didn't bother, and now we're back down at 90s. So, a bit in the balance here, I think, at the moment. 84s, 83, 85. You're still holding in this one as well, okay?
Yeah, and I had it again this morning. Well, but as usual, I'm slicing and dicing. I already bought some back, but I reduced my sterling positions before those CPI inflation data because you never know, right? But I went back into cable, went back added again to existing euro sterling shorts. I just still like the sterling, and I still like it much better than the euro as well. So it all still makes quite sense, I think. Now there's something about the dollar, and so my position in euro sterling is slightly bigger than cable because I've been reducing the cable a little bit on this run up as well. I do think we can see 131. We never know. We may be at the start of a huge dollar decline, but we never know, right? And the data are not of the sort of saying like the dollar is going to fall out of bed either. So I'm always a little more cautious with the dollar trade. I think 131 is possible, but that may be as far as this move or this leg of the move can run. And I'm actually looking a little bit at other stuff as well, you know. Like yes, the Kiwi is back higher, and the Aussie has also found support, but they are lagging just that tiny bit. Also looking at what happening in dollar rand, dollar mix, dollar Canada. They have different sensitivities, but I'm still a bit cautious to go like all gangbusters. I was pretty short dollars at one stage, but then you always have to keep reasonable. So I really think if we see 131, I'm going to take the rest off and watch it for a little bit because we could have a little bit of an overshoot and then coming back. Same is starting to feel same one is starting to feel on gold as well, and it's still extremely big, and we are through 24 and a half. But the momentum buyers are very much in charge right now. But then when I look at US yields, for instance, they don't support much further to go. Although there is other stuff, as I've been explaining at work in gold. I think gold is really the basket, and that comprises everything that you don't want to have in other stuff right now in the market, and whether it be expectations of lower yields, geopolitics, yeah, even the gold miners are flying, and it's also an anti lower yields and all those kind of things going on. It's really the basket where everything that is going wrong elsewhere is now concentrated. But we have done the move from 23s up to nearly 25 now. It also may start to be enough for this round anyway. That's how I look at things. I have targets up around 25, and I've reduced it a little bit again this morning, got about a quarter left, and if I see 25 and a half somewhere on an overshoot, I'll be more than happy to take the profits and reassess. So this is where I am at right now, you know.
Yeah, the gold it's looking like it might be back on the stocking up trade that we saw all through, you know, this period when we saw this big rally. It's got just got that feel to it, you know. And you mentioned the buying in Asia, you know, every night. It's just got that feel to it again. This is more than just you know, inflation trades or yield trades. That the buyers are back in again.
Yeah, absolutely. That's what I've been saying as well. I'm very closely monitoring whatever Asia is doing on gold, and they during the night, even though we came in well away from the highs, but overnight they have been buying again, and that's what I was saying too. It's probably one of the reasons is that the market, or at least the Asian market, knows that PBOC is likely on a path of small weaker yuan somewhere that would like to be. So what do the Asian accounts do? You go into something where you don't want to have yuan, and then if they are if the dollar is not doing great, they run into gold. We have seen that already many times, and it's not only China. You can look at the other Asian central banks or even the Asian investors. They are doing the same, right?
Yeah, and some of those Africans as well. They're getting in on the act,
Yeah.
as we heard. Though I don't think they've got the pockets to do anything meaningful in this, but it all adds up. Do you want to take it for a couple?
Yeah, sure. Quick look at what happened in the Kiwi over those CPI data, because it was indeed a very interesting move. We had lower CPI headlines, and where did it run into? Straight into the trendline support and bounced. Okay, so and as I was saying, this is probably due to that non-tradable CPI, which is still sticky, market overpricing some stuff, already going into the CPI data on a much lower Kiwi, and we bounced straight off the trend line. I don't have anything in the Kiwi right now because I'm not sure if it's the right one to have, but at least for those who picked it up, it's a nice trade, and we are bouncing off it. So this is a very decent level to hold. And I see Angela mentioning the euro crosses and the euro Aussie as well. Look at where euro Kiwi went up to, right up to that trend line as well, and up to the 61.8, around 180 and a half, 180.60. Okay, and now we are already reversing from it pretty heavily. And I think that also is something that we have to bear in mind when trading euro, is that some of those euro pairs are not as big as they may seem. Some of them, at least. Euro Aussie as well. I thought we could reach this 162 and a half, but we really fell short of it right now. Although we are not miles away, I still think this could potentially go up there. But if you look at the broader market, of course this is higher. But I still would think that if we get to certain levels, it may just lose steam and start to get back down. This is one that I keep an eye on if it comes up to 162 and a half, just to see the reaction up there, see what the euro is doing up there. Can we show the euro dollar? It's grinding. Yeah, people are say 110, but already there's this triangle trend line coming in around 109.70, 75. Then you got a bit of an extension here around 109.85. So watch the 75.85, I'd say, for a starter. If that would go, then there's probably more stop losses also to be triggered, and we could go for a run, but not sure how far the euro can really go. And I promised yesterday to have a look at dollar rand. The rand, and I was scratching my head a little bit yesterday why dollar rand came down relatively fast here. I've got smalls, but we are still very well in that triangle, and not only the triangle, but we are keeping above this prior low here. So for those playing this triangle, which I am trying to do, 1790, 1786, 85 is really where it has to hold. If we would get below this triangle, try out with some stops. But it's already holding 18 right now. I didn't get to that I had in overnight, so I pulled it. I still think we are in here. Yesterday, I think the reason why dollar rand went lower, first of all, we had a bit of a lower dollar, but also gold was ripping higher, and we can't forget that South Africa is still a gold producer. So I think that one and all had a bit to do with each other. But now that it's calming down somewhere, we see dollar rand starting to move higher again. So I think it's still valid, this triangle, and perhaps draw a bit of a line around here, perhaps at some stage back to 1870s, 1880, perhaps. That is still very possible for me. I'm still not a rand bull. And yesterday, finally, I gave this one a try. I was hesitant when we traded around. This is Euro Noki, and again, I'm seeing triangles everywhere these days. We went slightly above, and on the way back down, I decided to give it a little try here, see if this can hold. We have a double level here, 1181, 1183, 78.6 of this move lower. So that's going to be a very, very low risk trade now, because I've already taken smalls back this morning around 74.5. So very, very low risk trade. See if this can hold. Also, if you look at Scandis being some kind of accelerated euros, stocky even more than Noki, but they can be. That may be not too bad of a trade. Perhaps dollar Noki would be better, but I chose to do euro Noki because I'm still not a huge fan of the euro. And with that, Ryan, back over to you, mate.
Thank you very much, mate. Ali, you've asked that question about reversing trades. Just looking at the clock, we are running quite long, so remind me tomorrow if I forget, and we'll have a chat about it tomorrow. For now, we'll call it a day. Thank you very much, Kay. Thank you very much, everybody, for coming, as always, to the Flow Show. Trade well, trade safely, and we'll see you all tomorrow. Have a good one.